All right, so today is Thursday. There'll be need for us to go through some of the pairs we looked at during our weekly preview. I think we have UJ. Let's start with UJ. Start with UJ. Right, so UJ gave us some pips this week, and we still have some potential for more. The market does what it should do. We only follow price action. Right, so this is the 4-hour chart on UJ. At the beginning of the week, we were somewhere here. Right, that was last week. And when we marked up UJ, we saw this source as an old source. That was an old source. And if you remember, when we get an old source, we expect it to be respected. However, if it breaks the source to the upside by one candle, we assume that is a stop hunt. By the second candle, the trend has been validated. So we'll begin to look for buy side opportunity. So true to our analysis, as at when we were analyzing, price was somewhere here, right? This was the highest point. At the beginning of the week, price went straight to the source and dropped, gave us a sell. So depending on how you want to trade this strategy, if you had picked a sell straight up from this engulfing, after it engulfed the last candle, you could have been in this trade for 295 pips or thereabout. If you waited for price to break down and break the last down candle before the bullish, right? So you would have been in this trade for, say, 130 something pips, right? So depending on what strategy you're using. But remember, this is an old source, right? This was an old source. If we're to treat it as it is now, based on the strategy, we could also have had, this is the highest point, the last up candle here will be the source, right? The last down candle before the high was created will be our order block. Last down candle before the high was created will be our order block, right about here. So immediately we had a close beneath, we'll be waiting for a retest to sell. So far, UJ would have given us about 190 something pips, which was why I had 186 pips here as what we've taken out of UJ so far this week. Very clean, very sweet, depending on how you decide to take your trade, right? So you could watch the first video, the preview was uploaded on Sunday to see how we framed out this and how we're able to catch this. However, we did a webinar sometime within the week, I think that was 2 days ago, and I introduced the new concept, gaps. I see UJ being a long-term sell. If you're a swing trader and you have a position open, you could keep trailing your stop loss. I see UJ getting as far down as this point. There is a gap here. If you can see, there is a gap somewhere here. If you don't understand what I mean by gap, you could go watch the video we posted. Let's use a different color for this. So this is a gap, right? Price was not fairly traded here. So we'll have a gap here. We'll also have a gap somewhere here. A very obvious gap for that matter, right? Somewhere there, right? The AB candle, there's a gap there. Price might be seeking to come towards this point. It might even come all the way here, but I haven't explained that concept yet. So let's just take this as our target point for swing traders. Notice that presently, there is a gap here on UJ, right? There is a gap there, and there's a possibility that price may pull back to close that gap. right? There's a gap, taking this as our reference candle, taking the bearish candle here, the large bearish candle as a reference candle, and there's a gap between A and B. And price may just go close that gap and give us another opportunity to begin to sell. Right? So that is, I've gone further than what we really wanted to do. We just wanted to see how our preview had played out. But that's UJ for us. Let's see what other pair did we look at. We looked at UCAD. UCAD there. Let's wait for it to load up and see what UCAD had given us after the markup. Right, so UCAD. So this vertical line delineates the beginning of the week. When we marked up UCAD, we saw this bearish candle, large bearish candle here, as an order block that created that high. And we had a breaker here. We had a breaker right about here. We're waiting for price. We're hoping that price will retest the breaker and the source, right? It actually made a retest of the breaker last week. We're anticipating that price will fall off from there or push a little bit towards the source before falling. And that was exactly what price did. It pushed into the breaker almost towards the source and gave us an opportunity to sell. So we had a W, an M here, push up. We had an M push up, came down, pushed up again, but failed to take out the previous high. And then dropped thereafter, right? So that drop would have been our trade, right? The drop would have been our trade. If you go down to 15 minutes, we would have had an entry on USD card. I think we discussed this briefly when we're looking at gaps, right? We discussed this. And at the beginning of the week, sometime on Sunday, we highlighted this point as the gap we're hoping USD card will come to fill. So that's our long-term target. When USD card fills up this gap, we'll technically just wait to see what price will do. We'll be out of the market technically and wait to see what price will do. Presently, USD card is doing a reversal. Let's see how far it will go. If you understand what we've been discussing so far, you would notice that there is a gap in between this point and this. Right, taking this point to be our reference candle. I guess these lines are too thick. Let's make them a bit thin so we could see things clearly. Right, so there's a gap between this low wick and the up wick. There's a possibility that this candle might come all the way here and then drop. And besides that, we also have a breaker, right? We have a breaker here. So we have a source here, rather. Beg your pardon. We have a source here, right? So this bullish candle is a source. So we might see a retest of the source, which also coincides with the gap we're seeing there, then a drop. Is a possibility. Price can do anything it wants to do. Our long-term target, like we mentioned, will be somewhere here. This will be our long-term target. Right, so if you follow through from the beginning of the week, let's go down to 15 minutes. 15 minutes, I think we explained this on Wednesday, and you held on to that trade. If you did, you'll be in this trade for some handsome pips, right? So how much? We got 368 pips from USD card, depending on how you trade and when you got into this trade. So Euro card is the next pair. Euro card was a little bit tricky. It was tricky. We didn't really see the type of movement we wanted in Euro card. It's been consolidating. It hasn't really given us what we wanted to see. So this was the source from last week. This was the order block that was broken right here to give us a breaker, and it sold off. Right, so last week, Sunday, we were anticipating a retest of the source or of the breaker. So of course, it didn't get to the source, and it just about pierced through the breaker and fell off from there. Right, if you were with us on Wednesday, I tried explaining that I'll prefer a situation where the source and the breaker have some form of intersect. It gives you some level of confidence because we're only looking for sells upon a retest of the breaker or the source. So there's every likelihood that price might move towards the source before falling off, if it eventually does fall off. And so when you have a large gap between your source and your breaker, you become not too confident in taking your sales upon a retest of your breaker, because you have at the back of your mind the price might want to make a move towards the source. And that was exactly what happened with eCard. We got an entry, which I explained on Wednesday, right? We got an entry, but we also noticed that price has not really moved as much as we want it to move. So it simply means we have an opportunity for trade here. When price is going to make the large move, we'll be there waiting for it. Presently, based on price action, Eurocard is still in the bearish territory. We didn't get much from Eurocard, just 86 pips. We could catch from Eurocard based on our 15 minutes entry. Based on our 15 minutes entry, right? Just 86 pips. You'll notice it's been ranging, it's been dancing up and down. So there's not much we could do with Eurocard. But 6 pips still good enough. Then we had GU, which was sweet. We had GU analyzed again on Sunday. So if you've been missing our pre-week webinars, you know what you're missing now, right? So we try to paint a scenario and wait for certain things to align before taking the trade. Let's clean up this chart a little. Clean up the chart a little. Okay, this will do. Take this out. Let's have our session breaks here. Show period separators. Take this out. Very good. So for GU, we were here at last week. As at last week, we were here. We saw this push up, and we concluded that there are 2 ways you could mark up this. You could go watch our video to see how we arrived at that. Right, so we said we could pick for an order block. We're looking at the lowest low, and we picked this to be the last high before this low. So this was going to be our order block. This candle here was going to be our order block. And I mentioned that I have some friends who would prefer to mark up just the bullish candle as their order block. I also mentioned that I prefer knowing how price moves, right? The push up, buyers were in control up to, let's magnify this a little. Let's magnify this a little so we see. Buyers were in control up to the top of this bearish candle, the wick. Buyers were in control up to that point. And if you understand, if you watch our part 1 of trading in line with the institutional order flow, you understand why we mark up the way we do. So I said I prefer to pick my order block from the top of this week. Now, so let's make it double so we could see what would have happened on both scenarios. Both scenarios, what would have happened? So I clearly mentioned some persons would pick just the bullish candle before the push down. And I was interested in the top of the week. So price close beneath would have, price was making a push up. If you had chosen this bullish candle as your order block, then you'd have gotten a breaker right about here. You'd have gotten a breaker right about here. But I wasn't interested in this because there are some wicks here showing resistance. So I'd rather pick this. And we had to wait until this day to get our breaker. Until this day when price broke above the order block to give us a breaker. If you had used this point, you would have gotten your breaker since last week, and you'll be waiting for a retest of your breaker or your source to go up. Now let's mark up our source. Our source is going to be the low, from the low down to this point. That will be our source. And of course, the color is going to be blue. Right, so notice how price broke above whichever you pick as your order block. Price went above, broke out from this point, came back to retest the source and the breaker. Now, if we use this outer box as our order block, price broke out from it, came back to retest the order block, never really touched the source, and rallied from that point. So I'm going to change the coloration to tally with our nomenclature. So we have a color code, yellow, whichever one you decide to choose. Color code, yellow. Right, so we have all this marked up. Let's make this thicker so it becomes easier to see. Very good. So now we got opportunity to buy from this point. We got opportunity to buy for this point. Some persons actually started buying right from here on Monday, but I actually got an entry from this dip down, right? So let's go down to the 15 minutes and see how that would have played out. So on the 15 minutes, on the 15 minutes, we would have been looking for a violation of a previous day's low and an opportunity to buy. So we had that right about here. Price dropped beneath. This would have been the last bullish candle before the rally. If you don't understand how we're picking up our points, you just need to watch our videos. We wouldn't be doing so much of explaining today. Right, so we had this here. as our point. And once price broke above it, we're waiting for a retest to buy. And that was exactly what happened. We bought from here, went into drawdown, and held on to that trade. And that was why we have here that we had a potential 512 pips buy on GU, depending on how many pips you caught, right? So pretty straightforward. From the 4 hours, it's all laid out here. We could see that we're in a bullish territory upon the violation of the last order block, which gives us a breaker. We were in a bullish territory. Now, for swing traders or people who want to hold on to this trade for long, you might want to go look out for gaps, and there are lots of them, right? Go look out for gaps that price might want to come and fill up. For now, I expect price to fill up some other gaps on the lower part, the pullback, before it continues the rally. So that's that about GU. CAD JPY, there was no clear-cut entry. CAD JPY, no clear-cut entry. No clear-cut entry for CAD JPY. If you use our novel method of entry, you might have caught some pips, but no clear-cut entry. So let's quickly clean up this chart too. Very good. Right, so based on this was our lowest point as at last week, and we picked this to be our source. And this was our breaker. Right, so price broke above the breaker. Let's quickly change this to meet our criteria. So we're anticipating a retest of the breaker or the source. We were anticipating the retest of the breaker or the source, and that retest happened soon after market opened on Sunday and gave us a push up, right? But I wasn't too confident of this because, like we said, the breaker and the source didn't have any form of intersect, right? So when I'm taking a buy off my breaker, when the breaker is far away from the source, I do it with half the lots I would usually want to use, because you could just take a nap or walk away from your screen and price makes a big dash towards the source, right? So we had this push, depending on when you got in, potential 200 pips plus to be taken from CAD JPY. Presently, it is still bullish. The order flow is still bullish. This gap has been covered here. So the order flow is still bullish. There is a gap here. If you can see, there's a gap right about here. And I'm anticipating that price may want to come all the way to that point, a 460 pips, the possibility for price to want to come all the way to that point. CAD JPY is a sluggish pair. If you remember from Sunday, we're also anticipating that CAD might be strong if there happens to be any form of rally on WTI, US oil, and that rally hasn't really happened yet. So like I said, no clear-cut entry for me on CAD JPY. However, if you've been using our novel entry point, you might have gotten an entry on CAD JPY because you know already that CAD JPY is in a bullish territory. So upon the retest of the breaker on Monday, you would have been waiting for only buy signals. You only obey our buy signals. And if we come down to this point and we come from Monday, which happens to be this, you only be taking your buy signals that falls within the kill zone. So this would have been our London session buy signal, right? So we would have gotten in upon a break of the bricks. Stop loss will be 34 pips, take profit 34 times 2, right? Obey only the buy signals, only the buy signals, only the buy signals, right? Only the buy signals, because our order flow is bullish. So we might have caught some few pips here and there, but not like we would have really wanted it to be. Last we looked at was EN. EN also hasn't really played as much as would have wanted it to. We just discussed that briefly and call it a day. We're meeting again on Sunday evening to have a glimpse of what we expect from the week, right? So we're here on EN. Let's take out some of this. Take out some of this. For the purpose of this class, take out some of these. So we're here, EN. Last week, what we saw was this. We saw this source, right? And we saw this breaker. That was what we saw. This was a breaker. Price came and broke beneath it. And this was our source. So price broke beneath our breaker. We'll be expecting a retest of the breaker or the source to sell. And we had one opportunity here to sell. Then a pullback again, a retest of the source and sold. This happened on Monday, right? And we had a pullback again towards the breaker and the source to sell. Remember, our order flow is clearly bearish in this case. We would be only be looking for sell opportunities. We'll only be looking for sell opportunities. We can't predict how far the pullbacks would be, right? So we'll only be looking for sell opportunities. So we analyzed this last week, and I didn't really get much from EN, just 60 pips, because of course, as you can see, it has been ranging. However, if you use our novel entry technique on the 15 minutes, starting from which day? On the 15 minutes, starting from Monday, you only have been obeying your sells and you forget about the buys, just the sells from Monday. Sells from Monday, the 23rd. So 23rd, you only look for sells, EN, because this is Euro NZD. You either obey it during the Asian session or the New York or the London session, right? So let's say, let's forget about this for now. So we could have had a sell from here. We could have had a sell here and another sell there, right? All these are sell opportunities, but not as clean as we would love it. This was a sweet one on the 26th. Still not as clean as we would love it. And of course, you could see that happening. You could see the reason why, because on the 4 hours, it was basically just consolidating, right? It was basically consolidating, right? So that's how the week has been based on the pairs that we analyzed. If you have any other pair you want us to add or something you like looking at, then you could bring it up, put it in the chat on Telegram. I'll work on it, mark it up, and it becomes easier for us to analyze on Sunday evening. Keep safe from coronavirus, and see you on Sunday.